Prices swing high like a rock and roll band. Buy, sell, buy, it's a feverish plan. Chasing down dreams in this trading land. Call up my broker at the crack of dawn. Trading stocks till the break of dawn. Fortune's fickle, but I play along in this wild market where the bulls belong. Spin around like stocks on fire. Dance on the floor of my heart's desire. Money's the rhythm, hectic and higher. Chasing the glitter, I'm a trade flyer. Checking the ticker, my heart goes wild. Green and red candles make me smile. Fortune's ever fleeting, but I'm beguiled. Riding the waves in this market style. In the flashing lights of LED screens, I place my bets and chase my dreams. Fortune's made and lost, it's never what it seems. In this hustle we trust our schemes. Spin around like stocks on fire. Dance on the floor of my heart's desire. Money's the rhythm, hectic and higher. Chasing the glitter, I'm a trade flyer. Spin around like stocks on fire. Dance on the floor of my heart's desire. Money's the rhythm, hectic and higher. Chasing the glitter, I'm a trade flyer. Strutting down the street with my chart in hand. Prices swing high like a rock and roll band. Buy, sell, buy, it's a feverish plan. Chasing down dreams in this trading land. Call up my broker at the crack of dawn. Trading stocks till the break of dawn. Fortune's fickle, but I play along in this wild market where the bulls belong. Spin around like stocks on fire. Dance on the floor of
Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hi guys, hi guys, hi guys. Everybody give me a sound check. Let me know if you guys hear me okay. Um, mute myself on the other video. Where's my? Hang on a second. What's gonna? Oh, I know why. Hang on a second. Sorry. The Fed is. I have the Fed page on the other page. Hang on just one second, guys. Sorry, guys. Okay. The Fed is muted. Good afternoon. Hey, everybody. Give me a yes. Everything is good. Thumbs up. All good. Is the song downloadable? Yes, it is. You know what? I think it's, where's it? Sona. Let me find the link. I'll get you the link. It's actually really good. Hang on a second. Let me. We got a few minutes. Let me find this link. It's AI to the right songs for you. It's called. What the fuck is it called? Sona. Oh man. Sorry. Sona? Oh wow. Why is it not coming up now? I forgot my own thing. Oh, Suno. That's it. Okay, hang on a second. Suno's too many things. Okay, so here's my library. Which one is it? Which one is it? Okay, bear with me a sec, guys. I gotta go find it now. I think this is the one. No, not this one. Okay. Okay, blues. Nope. Sorry. I can't find the song now. Oh, Trade the Night Away. This is it. Okay, let me see if I can give you a link. Share. Copy link. All right, I'm going to put this into chat. Okay. Sorry. All right, now that we're all distracted. Here's a song. You guys have a good time. Enjoy it. Okay, guys, I got something really good to share with you today because it was interesting. This morning I got sliced and diced on all of my signals, whereas now the signals are really, really starting to work. And I had this really interesting epiphany. When I left you guys, I actually made all the money back because I had this super interesting epiphany about all of the signals that we generate in terms of how to really, really trade them. So 2:15, we got 15 minutes before Jerome starts talking. I will have the ability to stream him through StreamYard, so we'll be able to hear what he has to say. We'll see what kind of market reaction there is. My initial read, as I suspected, is I think the Fed is much more hawkish than the market expects. Like, I think the cuts are done. I don't think we're going to see any more cuts. Now, he's not going to go out there and say it, but I think the idea that there's going to be more cuts immediately is really going to be questionable. He may say, hey, maybe we have to wait for the summer, and the summer turns to fall, and maybe the fall turns into winter before there's any kind of easing. I think the economy is operating pretty much at capacity. He doesn't have any unemployment issue. He doesn't have demand issues. So there's very little reason, aside from the fact that Trump wants lower rates to pump up the economy, for him to move. And, he does not really like being bullied by Trump. So the thing is, my initial read on this is that I think it's going to be hawkish, which is negative for the market. And as you see them, where the market is starting to kind of really begin to trade down. If we're looking at NASDAQ, which is the most sensitive to interest rates not being lowered. In other words, it will the one that will explode the highest if rates will go down, and go down the farthest if it's a hawkish read. So I think there could be some really interesting continuity. That having been said, though, the thing that I thought about today when we were trading this morning and getting chopped up left and right is that the single most important thing in trading is not your algorithm, is not your signals. It's one very, very important thing that almost everybody takes for granted or skips over. Anybody want to tell me what it is? Anybody want to give me a clue of what is more important than the signals? We are getting it, by the way, like a nice continuation signal to the downside. So I do want to take it. And we do have, I introduced, where's my whole thing? Order. I introduced this whole idea of trading from the chart, right? Which is what I want to do right now, guys. So I'm going to sell this in front of the news. Yeah, it's a lot of volatility here. So as soon as I sell, this is a third of the fourth continuation move down. So I should have known better than to push this down. I sold the bottom here. It sucks. I should have. This was the sell. This was the post-reaction sell. I think overall it's going to be a very negative sell, but there could easily be a lot of retraces along the way. So this trade works. This doesn't work. I'm not going to cry about it. It's a small move, but I should really be talking, not trading right now, because we need to wait till he comes on board to see where just how hawkish he is, because that's going to give us a direction to the market. You know what? I'm just going to get out. I'm going to get out. It's probably going to go down anyways, but I'll take a small, tiny little loss here just because I don't want to be in trades until he starts talking. But what I was going to say is the single most important thing about the market, liquidity, somebody's saying risk, reading the market. Keith is absolutely right. It's actually reading the market. And what that means is there's only two types of markets. There's a continuity market and there's a range-bound market. In a range-bound market, every extreme signal, it lies. So you want to do if this is a sell, you want to be buying. If it's a buy, you want to be selling. In a range-bound market. In a continuity market, every extreme signal tells the truth. If it's a sell, you want to go with it. If it's a buy, you want to go with it, right? So a very, very obvious point of view, when you go, it was a good thing I got out of it because you see how this was a nice big retrace here. That FOMC day itself, when nobody's willing to take a position, the thing that is much more true than not is it's very likely going to be a range-bound market, which means all of these signals were gold if you knew how to read them. In other words, instead of believing this was a true signal, you should have bought this. It was a lie. You should have bought this. This was a lie. You should have sold that. That was a lie. Point being is that if you were in the right frame of mind, every one of the chart signals, which generally signal continuity, actually gave you great reversal entries. You could have bought this right here. Boom. You could have sold this. You can see that at the end of the day, I actually did start selling a lot of these things and managed to do really well on the trade. But that's the single most important thing. It's not the signals themselves are simply reflecting certain aspects of price action. But price action can either lie or tell the truth. And that is determined much more by the market tone than anything else. In a highly trending market, all continuity signals are going to tell the truth. In a highly range-bound market, every continuity signal is going to lie. And it's kind of like being a poker player. You got to figure out if it's, if they're lying or telling you the truth. Now, I'm kind of tempted. I am really tempted to take this short here because I believe they're telling me the truth that the market is going down. So let's just give it a shot. I got 6-7 seconds left here. This is telling me that it's a super trend sell. All right, let's give it a shot. Let's see if it works. maybe it's lying to me, but I have to believe that the market doesn't love the statement, but maybe maybe it's still going to run it against run it against me in front of Jerome, hoping that he comes in a little bit more dovish. We'll deconstruct the statement in the next couple of minutes. But let's see if my read that this is a truth, not a lie, is coming through. I'm not looking at gold right now. Gold is doing nothing. The trade right now is going to be NASDAQ. It's going to be the most active. Unless, he makes some really radical statement, I don't think gold is going to have much of a reaction. That's it. No continuity signals. Looks like we're just, we're reversing. Okay. I ate this. Now, I'm going to wait to see if the signal forms. If I'm still in the mode of mind, which I am now, that all of these signals are just kind of range bound, that I actually want to be fading this. I took this as a continuity signal. Now I'm going to take this as I didn't get a signal, so now I have to just be very patient. I thought I would have a buy signal, but I didn't. So I'm going to be patient on the next move here, and I need to go to 2 units to get myself organized. Tell me if you guys seeing this. Let me see if yeah, you are seeing. If I share that, that's kind of cool. I can do that. Okay, so we can do this. Tell me if you guys are can hear this. Can you hear the music? Yes, no? No. Damn. Okay, hold on. What about now? Okay, cool. All right, so at least I learned how to do this. Okay, now just bear with me a second. We're going to try something. If I go here, okay, you see this, right? You see the chart. Now, I'm going to go back to Fomc and tell me if you hear the music. Oh, they stopped. What's going on over here? Do you hear the music again? Yes? Like right now, do you hear the music? Yes or no? No. Yes. Okay. Okay. All right. Cool. So, so we can go back between the chart and Fomc and listen to what he's got to say and be able to flip around, which is most important. All right. Awesome. All right. I'm gonna mute him for a second because it's so boring. And we'll go back over here. We'll look at the charts. Look at this. Just got clipped by the volatility and came back down. It's just too much volatility on these moves. unfortunately. Okay. So we'll wait. They should start in a few minutes. He's going to make his statement. We'll listen to the statement. We'll see what's going on over here as far as moves. I still think let's take a look at the tab here. Oh, zero hedge does not lie. It's interesting. He says any minute Trump will learn that the Fed has stopped cutting rates as soon as the vegetables moved out of the house. Yeah, Trump is probably going to go nuts if the Fed is going to say. I think that yeah, after Fomc's statement. Red line, here's the statement. Recent indicators suggest economic activity has continued to expand at a solid pace. Unemployment rate is stabilized at low levels. This is all hawkish, in my opinion. Maintain target range at 4.25. Voting for the policy action were Powell, Williams, Barr, Bowman, and Christopher Walter. Voting against was Beth Mark, who preferred to maintain. I guess this is from the prior statement. Okay, interesting. Okay, let's go back to here. Market not buckling. Okay, still waiting for. Oh, it's not quite 2:30. I'm going to give it a shot. This isn't a signal, but I'm just I'm trading my bias here, and I'm probably going to eat it, but I don't care. Let's give it a shot. Come on, baby. Too much volatility. Sell signal here, just not working. Let's see. Is he coming out? He's talking.
Is strong, is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal.
I took a long
Estimates based on the
scalp
consumer
as
price
we
index
flipped
and
around.
other data indicate that total
From here to here as my flip. Well, let's see what he's got to say.
projections appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American.
So I took a long shot. I haven't took a long and flipped everything over on the long side because markets really broke out after his initial comments. I just want to watch his comments for a while here, and then we'll go back to looking at the charts. Let's see what he's got to say.
By a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we'll be open to new ideas.
He's being pretty even-handed. Now he's talking about boring Fed stuff that nobody cares about. Markets are getting a little nervous. Charts are starting to come down a little bit. Let's go check. Let me see. If I share this, tab, we have a little bit of a sell signal here. It does feel like, he's in no hurry to cut rates. So it doesn't look very, very bullish for the market. We can try to do one quick sell here. Let's see if it works. I'm a little bit late. I'm really late on this stuff. The sell should have been here. I'm gonna get retraced down. I'm sorry. I'm executing very poorly because I'm trying to look at the chart and what he's got to say here. Having said this, though, I'm going to run you through how I was able, even though I got stopped out on these couple of other trades, I still made money because I reversed myself in size on this trade while he was talking. Okay, so this trade should have actually been 410. This should have been a good trade. I should have been in this trade. I'm gonna go. I'm gonna sell here at a better price and hopefully better size. Let's see if I can get into it. It's surprising to me the market is as bullish as it is, but maybe it just doesn't care. Maybe it's just it's happy with the with these rates. Market is really bullish, and I'm eating my my buy. So this is getting very upside now. Okay, hang on. -1, 4. I want to go to the buy side. I'm going to give myself the time to see if this thing completes and stays bullish, and just reverse myself. I'll let the candle complete. Damn. Sorry. Damn, this did not take the, I didn't put the stops and targets in there. I'm going again with stops and targets. I took a little bit of a profit. Now I'm going back again with stops and targets because I didn't have the stops and targets on here. Let's see if I get continuity on this trade. Again, look at this. I should have been in here. Look at this execution. Really bad execution on the trade. A lot of volatility on this stuff. I'm eating these trades. All because of bad execution. I should have been here. That would have been a nice, easy trade. Okay, let's do this again with better execution. All right, good. That was good execution. I finally got it right in terms of sizing and direction. So I'm not even listening to what he's saying. Okay, let's go back to what he's saying. Let's see what he's talking about here.
No, so let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market. And we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret too good or too bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
Okay, I think I'm finally understanding. I think I'm finally understanding why the market is taking this as a bullish signal. Okay, I think I'm finally getting it. He's basically saying that it looks like inflation is contained. That's really what he's saying, and that ultimately is a path towards an easing monetary policy, or at very minimum, no further tightening on the spectrum. I think that's what's really, that's why I misread the market initially to the short side, and then I flipped myself over to the long side, execution problems, but then I corrected my execution problems and got myself all in order. So I think when you sort of take all this away, that's basically the net takeaway of what's happening. The market is just reading this as a inflation is under control statement, and that's net bullish the equities for the time being. So let's give us a little more time. Let's see what else he's got to say. Let me go back over here and see what he's got to say.
Administration will patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel the economy, that policy is restrictive, suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And, as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster.
There's a buy signal coming up on here. Just went away. There's one in S&P right now. It's also kind of showing up. Goes away. No signal.
Have a strong and persistent commitment to diversity and inclusion. These
All right.
organizations consist.
Nobody cares. This is a DI question. Okay. So coming back here, look at the charts. We have a big pop because he seems to be pretty sanguine about inflation. I guess market is taking that as a positive thing. Let's see if this signal, either on the S&P or on NASDAQ, plays itself out. We actually can't even get a signal because it seems to be rallying so strongly. Similar signal, by the way, in gold here, that's giving us a signal, which we can do. Gold would be 30.20. We can just buy one gold here and give it a shot. Gold obviously is reacting positively on the idea that also subdued inflation means that they're not going to raise rates. That's modestly positive for gold. and gold is at, that's why the gold had a big risk move as well. So let's see if this buy signal in gold gives us anything, given the volatility, and we'll switch over to the NQ and everything else. All the risk assets are trading stronger, right? I completely misread the original intent. I think it looks like everything is going higher, which is good. We reoriented ourselves into this trade. I'm going to just take this gold quickly because gold is really overextended. Just get a little bit of a pop on the positive gold, and just try to wait for some kind of a buy signal in Nasdaq. Nasdaq has gone into super trend territory. It's in green trend territory, which is super trend. As the moving average is really separated hard. This is a completely bullish move in the market, and you have to respect that and now try to trade it from the long side until and unless there's some different read. So as you can see, I had a whole bunch of short signals that I got clipped on, and then I completely changed myself and I went long, and all those longs finally paid off. Yeah, S&P is much more subdued, so there really isn't much in the S&P right now. That's not even giving us it's giving us a buy signal. I'm happy to trade the S&P on a small basis here. All of this hopefully makes it easier for you guys to. I'm watching this right now. 6-7 seconds. I'm going to wait till the signal disappears. Okay, no, it's good. It's good. All right, I'll buy it. All right, it's a tight stop. I might have to eat the stop here. Let's see. Yeah, it's a tight stop on the S&P. I need a little bit more breathing room on the S&P for these Fed days. But it's fine. I'll come back. I'll come back on the next signal. Not a big deal. Let's take a look at the NAS. NAS has a buy signal. Oh no, that buy signal was here. So okay, a NAS signal also fails. So both of these buy signals kind of fail on just volatility, which means I'm going to wait for the next signal to let it give me directionality. The thing that I'm doing with the signals that's really helpful is if I get stopped on the first signal, I'm doubling up size on second signal, and if that trade works because I'm positive risk reward, it really puts a massive P&L on. It helps me recover and more so on the P&L stuff. This one just simply, unfortunately, just dug too deep. Just stop me out on a retrace. If this comes back and recovers the green area, I may just go back into the NAS. We'll see. The initial moves so far have not been able to be sustained. All right, let's see if there's any interesting questions over here. I'm going to share this again.
Further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly? You said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing. The ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment.
sorry guys. So I'm switching between him and the charts, and unfortunately I didn't get a chance to show you. Remember I said I'm going to go back in if this recovers the green. Again, I got stopped on a volatility. I went back in here at 76, and I gave it up at 78.5 on double the size. So not only was I able to wipe out all the losses here, but made a nice handsome profit as well. And that's basically sort of my strategy here is, as long as the direction holds, if I get stopped out on a signal, I'm going back in. If this thing completely collapses and goes down, then it's a completely different read. But right now, as we're reading the market, it's a positive continuity market, right? I thought it was going to be negative continuity market. It turned out to be a positive continuity market. So all of this is sort of interesting because I think it shows you that the single most important thing is reading whether the market is continuity or mean reversion, and then reading obviously which side of the continuity it's on, because then it becomes a lot easier to take the right trades, right? So for now, we're positive continuity market. We've been that way pretty much since 5 minutes after the session. So we've been that way for about 25 minutes. Let's see if there's anything new on the conference that could change the tone. If there is, you'll see the price break right away to the downside. But for now, I think everybody can agree that we're just sort of positive continuity market. That's where the trades are. We took some trades in the S&P, and obviously the trades in Nasdaq would have worked as well. However, they would have worked with a caveat. So if you went long here, you would have been stopped out just on a basic risk parameters. You had no, you were right on direction, wrong on the trade. And when you're in that position, in a highly volatile market, it's worthwhile to go back in if you have the conviction. I had the conviction on the S&P to do it, and that worked out nicely on the trade. All of this is to kind of show you that there is no hard and fast rule. It's like playing cards. You got to read the room, read the table, and make the best possible adjustments you can with the tools that you have on these, especially on these volatile days. That's why people say you don't want to trade Fomc days, because they really require adjustments on the fly. They got to make them work. But the things that I always keep in mind is I'm trading small. If I'm wrong, if the trade just knocks me out because of bad luck, I'm able to repair that trade and come back in at larger size. If I'm wrong on direction, I can flip it and go the other way. The key thing is just to be very flexible. That's the thing in trading the market. I started out very weak. I had like 3 or 4 stop outs in a row, and then I flipped myself completely around. And you can actually see this on my. Let me see if I can see it on my charts here. It's like I don't know if you could. I have to show the tab here. I don't know if I can show this tab. But yeah, just trust me on the fact I'm just looking at my tab here that I had this big drawdown, and then I came back on the greens simply because I was able to readjust the other direction. Now we're coming back down the other way. Let's see if he's got anything to say that may be shaking us up.
Given our current mandate, so and I just think it was time to acknowledge that, the process. This process dates back. Thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're we're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision.
That's an interesting question.
As I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that
That's a pretty established
how
statement.
much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB.
All right, we don't care about this. Let's go back to the charts. It feels like that was a pretty bullish statement. I'm going to take a small long here because we're above the moving average. Let's see if we can make that that play out. It was a big run up. I thought it was a pretty a lot of volatility. I thought it was a pretty bullish statement in the sense that he said that we're still above neutral, meaning that there's more to cut. There's more to cut here. Nobody on the committee thinks this is the neutral rate. So I would think, I guess not. And I got myself a little bit clipped out on a small position here on NAS as we're getting a reversal signal here. Definitely a very difficult read today. Like you're not getting huge continuity one way, huge continuity the other way. A lot of just herky jerky movement, and then then we come back. I'm just waiting to see if this thing recovers the moving average. If it doesn't, then I'm not going to go back in. But if it does, then we'll stay relatively positive here. S&P is flashing sell a little bit. Yeah, I mean, just a little bit. S&P is looking a little negative, not much. I mean, you can't get up above here, but they're all getting above the moving average here. So to me, that's actually relatively positive. Let's try and do this again on the buy side. I got how much time? 30 seconds left. Let's see if this candle holds. I will. If we hold the buy side here, I'll go long again. But we need to hold it. And it's not. Look at that. Look how jerky. This is very typical of Fomc. Very herky jerky movements. No. I think one of the reasons why the FOMC is so hard to trade is because you're kind of waiting for everybody to come to a consensus view, because that's really what moves the market. And there just seems to be a lot of tug of war here, not too much consensus view one way or the other between the moves. But we're still, we're holding above the 200, trying to make that move above the 8-period SMA. I am just waiting to see if I get a positive signal out of these guys. Still staying red. mean, they held the lows here. They're breaking it up. Let's see if they can hold it. Sometimes we wait till about 3:15, 3:20 before people kind of decide to place their bets for end of day. Just to walk you through again, I want to get a little bit bigger here. Just to walk you through again, the value of trading small and not giving up on the setups. If let's say I went long here, I got stopped out. Fine. This was actually directional trade, but I got stopped out. No big deal. Then I went short, I get stopped out again. Okay, no problem. If I double up here, I go 1, 2, I still have lots and lots of capital left in the arsenal. I would go to 4 over here. And if I went 4 over here, this trade was perfectly okay. This trade actually fully traded well. I came in at 40. My stop would have been 60, just barely actually survived this. And then boom, drop down. And now I have a directional sell signal here, which I'm going to do sell, which I'm going to follow down because clearly we're not, we can't seem to be holding the bid. So let's go directionally to which the market is telling us right now. I'm still betting on the fact that we're more of a continuity market than a mean reversion market, but we could be a mean reversion market. At which case, again, because I'm trading such small size, I can always resolve this on the next signal or the signal after that. All right, we'll take like 60 ticks out. 60 ticks out of this one. Nice move. I trusted the signal, got enough out of it in this fast market. And it looks like, we're kind of giving gas. Let's see what Jerome has to say. Let me share this and see what he's got to say.
It propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Great question. We'll address it in a minute.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis. Although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment.
Wow,
on
he's walking away from that like a hand grenade. That was very, very diplomatically done. She tried to trap him into basically making a comment on whether he thinks the tariffs are a good idea, bad idea, and he's like, "I'm not even touching that with a 10-foot pole."
A lot
Really
of work
interesting.
done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something.
So, Stock Market Fool is asking a really great question, because the true direction of the market could actually be Microsoft, Meta, and Tesla in terms of how well they do and what they comment as far as their AI spend. I think one of the, everybody knows I've been on DeepSeek 3 weeks ago, so I was way ahead of it. Unfortunately, DeepSeek is dead, in my opinion. They're swamped. It's impossible to do any business on it right now. I think the interesting thing about DeepSeek, and I will say this, it is a very good model, and it is a much better model than any of the other models, maybe with the exception of Anthropic with Claude, which is a very, very good model also, in terms of really precisely doing what you want it to do. Claude is better at programming, but DeepSeek is very, very good at communication and expression. Today, Alibaba came out with their AI called Qwen, and they were like, "Oh, we're much better than DeepSeek." And I went to test it out, and it's nowhere near as good as DeepSeek. So clearly, I think DeepSeek has done tremendous amount of great engineering that will only help improve everybody else. I mean, it'll help move everybody else towards better applications of AI. I think ultimately it's like it's like the internet in 1999. You have a massive overvaluation, large spend, and then after that, huge productivity gains. I mean, it's not impossible that we'll all have 5 robots in our house in 10 years. Tesla, by the way, is really not a car company, obviously, but truly a robot company. And the question is, if they achieve AI through self-driving, which they can then transpose to actual workable robots, it'll be amazing. I mean, who doesn't want to have a robot in the house? Who the fuck wants to do their floors or dishes or anything else to do? It's much harder than it seems, but I think ultimately it's all very, very bullish for all the tech companies. So we'll have to see what they have to say after the market. I think they may play into the market being more positive than we think. The Fed, the net takeaway from the Fed for me right now is that inflation is under control. We're on pause, but willing to go lower. And if you take that as a general thought, that's not bad for the market. I misread the flows initially. I was able to correct myself, and I think ultimately, the flows are net positive, although it's a muted reaction, right? Let's see if he's saying anything interesting here. Let me just see what he's saying.
Much closer to target, but people are really feeling that. But overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy is, in your assessment, is that making it harder for businesses and the Fed to plan?
Right. Nobody cares
going forward.
Right. These are all boring questions. None of them have anything to do with our trading. Let's look at this. Oh, we're looking positive. Everybody watching this? This is a pretty strong bullish move. Let's get into it. On the buy side, buy. All right, let's see if this breakout move works for us. Maybe it's not, maybe not. But it's clearly a pretty bullish move here. This market just sucks. Just zero continuity today. Okay, again, took a small, tiny loss. I'm still well ahead on the day, and I will regroup. A lot of the signals are missing. I think they're missing not because I'm wrong, but because the stops are just too small for the kind of volatility we're seeing. I mean, this thing, look at this. It just dropped 20 points and just kind of held bid, right? It really sucks. Not a lot of just not a lot of directionality today. I guess, if you look at the lesson here today, almost every extreme move was fadeable. There was just virtually no continuity. You could have just, I could have faded every one of these, meaning I could have sold the buys and bought the sells, and that would have been a much, much better tactic. But it's very, it's not what you expect on Fed Day. On Fed Day, you expect continuity. So today it's one of those days where we just read the market wrong. Fortunately, still made a little bit of money, but it could have made a lot more if I had read the market correctly. All right, starting to get a lot more negative now. What happened here? I have a buy in the S&P right now. I'm waiting for it to complete, and if it completes, I'll take it just for a small entry. Nope, did not complete. Let me see if he's saying anything.
In a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? If we expect to see that, it's just a question of when.
Chair Powell, Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it. If I'm being at all unclear, we're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said what we said was that, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine.
Okay, let's turn back to charts. It looks like we're starting to sell off a little bit into the close after initial moves. So let's see if we get any kind of moves here to the downside. We actually do. Let's see if I can make this move happen. Sell. Let's see. I'm just every move is I'm getting the stops are just too tight on my moves, but also we're just like there's no continuity. There's just literally every single signal is reversing. So I will have to regroup here a little bit. Gold, same thing, came down and just sort of stopped. Like nothing is really moving directionally. So we just have to stay patient, wait for the next signal to see if we can get anything going. It still looks negative to me, and we're probably going to get a negative trend signal here, which I'm going to go into if it shows up. My stops and targets are very tight, and it's hurting me a little bit. But honestly, it doesn't matter. If I had my stops and targets wide, it would just be bigger stop outs today. There's just no continuity, so there's no point in making, no point in doing this. So this is a short signal for me, which I'm gonna try and take. All right, let's see where we're at. No, too short, too not enough room here to get through. Wow. All right, let's try this one more time. See if I get a signal. Usually the last half hour, we try to get a little bit of direction. So if they either they want to take it up or they want to take it down, that'll be my directional clue, and hopefully we can resolve it at that point. Okay, I'm getting a signal. Getting a signal on the NASDAQ as well. All right, I'm going to take the NASDAQ signal, then I'm going to go to the S&P and take that signal. Okay, beautiful. That worked. And the NASDAQ signal is working, and I'm going to take that off. All right. Come back to resolve everything to net positive territory. But you see, it's, you had to be super patient, not get frustrated, and find the direction, right? We had false direction here, false direction, false direction, false direction, true direction. And it was 1, 2, 4 sequence. Fortunately, what was good is that I had the 4 sequence on both the S&P and the NAS, so that really brought me back up to a to a positive P&L for the day. But I'm not going to lie, today was a huge battle. You saw me get stopped out probably 10, 12 times today before I was able to resolve the final stuff. And that's, I think, sort of like the final takeaway. Fomc is hard most of the time because it's not unidirectional like it was last time. When something is massively directional, then you have a straight up move. Today was just kind of a typical, I don't know which way we want to go move. Ultimately, it was a net positive move, right? Because the tone of the Fomc was that inflation is under control, and we don't have the final rates down yet. The rates are going to come down. They're not at terminal rate. So all of that is net supportive. Now we wait for earnings, which will come out in half an hour, and it'll be interesting to see. We'll see how those earnings print, because that's going to make a big difference on whether tomorrow there'll be a follow through in the market. And obviously tomorrow I'll be with you guys 9:30. We'll see what the follow through will be. If the earnings are good, I think we definitely have a positive follow through on all of this. If they're bad, that's probably going to have a bigger impact than whatever the Fed said. So I'll leave it there with you. Anyways, I hope you guys enjoyed it. It was good, bad, and ugly, but it was real trading, and you saw that the necessity to stay with your system until it eventually takes you to profit. Hopefully, you guys get a chance to see that in all my trading today. I'm going to leave you. Let me leave you with my indicators. And again, and ask that everybody open up an account with Apex. Let me give you the indicators. So this is the first time trend and the trend extreme, which is really the two main indicators that I was trading. I wasn't even trading the scalper today. Here the indicators. What? Hold on a second. Why is it not? Oh, just one sec. I'm sorry. I think. Okay, here we go. Here are the links. Okay, so links are there, and also please, my friends at Apex, open accounts with them, just like I have. This gives you enormous amount of flexibility to be able to trade all these ideas, both up, down, sideways, and in size. Anyways, thank you so much. Thank you. Hope you guys really enjoyed it. Who traded it with me? Did anybody take the last trade with me? Anybody give me a thumbs up if you took that last trade to the upside with me. I would love to know. Thank you, Keith. Thank you, everybody. I will see everybody. I'll see everybody tomorrow. Thank you so much. Thanks, guys. Everybody enjoy. Everybody have a great day. I'll see you later. Take care.